Hey everybody, this is Greg Ryder, and welcome to this interview series for Angel Investors Network. I am the CEO, and Angel Investors Network, we do a number of things. We help investors invest in early stage companies, kind of like Shark Tank TV show. You ever watch that show and go, man, I want to invest in that deal? We want to help bring investors into that world, teach you how to do it without losing your shirt, and provide amazing and incredible quality deal flow. On the flip side of that, we help entrepreneurs get the capital, get the education, and get the knowledge they need to raise money. And that's our way of looking at deal flow. So we're always looking for new investors. We're always looking for new entrepreneurs and growing our network. We have thousands and thousands of investors in our network, as well as investment bankers, hedge funds, private equity funds, experts, attorneys, lawyers, everything you can think of. Because one thing we do a little bit differently is we bring experts on in our community, like the one we're going to interview today, that also can bring some human capital to the table. So with our partnership with CXO Capital, we also have C-level executive management all over the country. So a lot of times our entrepreneurs need a CTO, they need a CFO, they need somebody to help them with their technology, their marketing, and so we bring that C-level executive management to the table, as well as our money, to help increase the success of our investments. So with that being said, I met David Drake at an event. We were speaking at the same event, and super impressed with him and what he's doing and how he's out there. And the guy's got so much content, right? So many articles, and is published on everybody from Forbes to everywhere you can think of, Yahoo, all over the world, and has offices all over the place. And I sent him an email, and I got the response back, said, hey, I'm traveling for a little bit of business, and I'm in Knightsbridge and London and all over the place, and it shows a list of all the places he's speaking at and where he's going, and it's just like 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, there's like 25 different events on here. So he is one busy man. So David Drake, I appreciate you taking the time to talk to us today. How you doing, man?
Thanks, Greg, for having me over. And for you, anything. I'll always be available for you, Greg, no matter where I am in the world.
That's awesome. So tell everybody what DLJ Capital is all about and what your main focus is in the investment world.
Well, you know, LDJ Capital is a family office, and we made some investments into the Zoloft Media Group, which is, you know, the focus of how do you access capital, and how you're allowed to access capital by different countries and different nations, by different governments. So I travel around the world talking to family offices, private equity groups, government agencies, as well as venture capital groups and angel networks, just like yourself. And I'm looking at how are they allowed in their market to raise capital, and what's the best practices? What's the best way to get capital access in different segments and different levels of industries, as well as different levels of the growth of a company? So that's what I focused on, and that's why I write for Wall Street Journal, for Forbes, Huffington Post, and 8 other publications, to share that knowledge and educate people that, you know, you may have other alternatives to raise money. It's just that there's so many options out there, and some of them are very convoluted. So we want to educate the world on new developments, and some of those developments are from the Jobs Act, the Jumpstart Our Business Startups Act, that was signed by President Obama April 5th, 2012. And in that act, when we started lobbying in that 2011, the year before, those were separate laws on how to raise money and get people jobs. 2 of those have still not passed 2 years later. So we're excited about what's happening and how you're allowed to market yourself and get capital. And one of the most monumental laws were changed last year, September 23rd specifically, I broke the news on Forbes, allows you to advertise private offerings if you are SEC and FINRA compliant. And that is a big change. First change to the 1933 and 34 SEC Act in 80 years, which is, you know, mind-boggling. But the reason it hasn't taken off yet is because the lawyers don't really know what the repercussions are. They're not used to these new laws, so it's taking a while for this law to be implemented nationwide.
No, see, and so everyone, you can listen. You know why we hit it off, because we're big guys on free enterprise. We're big guys on capitalism. We're all about the entrepreneur that's innovating, creating jobs, and stimulating the economy. And I'm going to make the announcement right now. Most of you watch and know or subscribe to our Angel Investors Network newsletter and our membership site. And David is our newest contributor, and we will be having articles in each issue from him, as well as we're going to be publishing some content in the membership site as well from David. And he brings some skill sets to the table that I don't have, and this whole idea of the worldly knowledge he has. I'm pretty good on the United States, but he brings a whole international flair to what's going on, and I'm super, super excited about that. So I want to say thank you publicly, David, for agreeing to contribute content to our membership and to our members, because you said it, it's all about educating everybody from the investors so they can make investments and help create wealth, as well as stimulate jobs, economy, innovation, and the entrepreneur. So let's talk about, give me, like, can you think of one or two deals? Normally I like to send questions ahead of time, you get a chance to think about it, but we didn't have time to do that. What is one or two of your favorite deals or investments that you've made, that you've been involved with, and maybe the success stories around those?
Well, you know, some of the investments that I'm focused on the last 3 years is the Zoloft Media Group. And that media group is a global reach media group focused on publications online, like Times Realty News, as well as the syndication of the articles that I'm already writing for Forbes and Wall Street Journal. But we also have a conference series where we do 200 finance conferences nationwide, talking about best practices. And, you know, me traveling around the world looking for best practices, you know, there are really cool stuff and articles that I've written about, you know, this chocolate manufacturer from the Caribbean working out of London. They did a bond for £4 million 8 years ago that was oversubscribed, and guess how they were paying the interest? In chocolate. So, you know, you're finding some really clever things going on there, and, like, you know, you can get 10% return, or we'll give you a basket of chocolate every month. So, you know, you start looking outside of the U.S., you find some really, really clever things. And I love finding them and highlighting those things. And then, of course, I'm a chairman of a PR firm called VictoriaGlobal.co. But, you know, I would encourage everybody to go to your site and read the articles that we submitted there and see what's happening in the rest of the world. Clever solutions and solutions on how to do things. Now, obviously, you know, when I met you, Greg, I was talking about crowdfunding. And my rise to fame in crowdfunding was that, you know, we were doing conferences every month during election year 2011. And the crowdfunding is part of the Jobs Act. Now, we lobbied for that and all the other bills too. And crowdfunding has really taken off in many, many different sectors. And maybe I'll mention 3 of the secrets of doing a crowdfunding campaign successfully. You know, one thing is to have a good video, just like you're recording now, Greg. You have to have good rewards. But most of all, you need a crowd. And the secret to a crowd is, you know what? Find 20 bloggers that are interested in what you're doing in crowdfunding or in your project, and convince them to launch an article the same week that you're launching your crowdfunding project. If you do that, anybody will probably be able to raise $100,000 minimum. That's a little secret that I think we should share with people.
No, I love that secret. That's a great one. And you know, and it's amazing to me how many people that I come across that just have this fantasy that I'm going to launch a crowdfunding campaign, and just because I put it on Kickstarter, Indiegogo, or Kickstarter, Rocket Hub, or one of the 100 sites out there, that the crowd's going to come. And it's like far and few between. And like you, I teach this little. I teach a strategy to find those bloggers, because people go, okay, well, how do I do that? So in our members area, we have a strategy for you to find those bloggers. I call it the YouTube image, or the Google image hack, and I teach you a way to track images around and find the right bloggers that write about your segment, your market segment. But hey, let me do this, because I remember we talked, and I don't know anything. I'm pretty dang familiar with the Jobs Act and crowdfunding, but you were talking to me about the real estate and what's going on with real estate on the crowdfunding. So can you kind of address what the real estate investors are doing, how that's going? Because I don't really know anything about that, and I'd like to share that with our community.
Well, look, you know, we're doing a lot of, maybe a dozen real estate events in the fall, focused on how to raise money online. As I mentioned before, the law of September 23rd last year that I broke with Forbes and the Jobs Act allows you to advertise private offerings. That hasn't been allowed in 80 years. And the Great Depression had people advertising the Great Depression had people advertising for offerings before the SEC Act of 1933, and that's why they prevented people from advertising private offerings. Now it's opening up again, and you're allowed to advertise. And of course, real estate is the oldest asset we know. It's a $40 trillion business just in the U.S. And as such, we know real estate. We understand, and it's not a startup where somebody's going to close the door and it's gone. The real estate is there. It's irreplaceable, as is the improvements. Consequently, there's a movement right now to get investors online to look at real estate projects because they're familiarized with it. They understand if there's a building in LA and they live in New York, hey, it's a building. The numbers are very similar. You look at the numbers and you see the rent roll, and it's a fixed asset. Consequently, we're seeing a big movement to go online to raise money for real estate. And we're tracking right now on our publication called Times Realty News, over 100 websites globally. They're actually raising money for real estate specifically. It's in the nascent stages, very early on, but there are movements with some of the family offices, and these are $100 million to $1 billion family offices that we work with, to get involved in the space. So we're very focused on family offices both in the Middle East, Russia, Europe, and Asia. And they're all interested in the space, and that's what we want to focus on. We have our headquarters in London, as you mentioned before, for one of our holdings, which is the Victoria Partners. Partners is the family office network that we have. And they all have one thing in common. They have liquid assets, equities, and real estate, every family office. And consequently, more and more money is going to be going into the real estate sector in the future, mainly because the pension funds lost money during the crisis. And bonds and treasuries are only giving them a couple % returns. To compensate for that loss of money from the great financial crisis, they're not going to put more money into equities because that's very volatile. So what they're going to start doing in the next 20 years is they're going to start putting more and more money into alternative financing, and that includes real estate, because they need to get higher returns to take care of the larger amount of people that are retiring right now. I mean, as of 2010, more people retiring than people coming into the workforce. So we saw a shift nationwide 2010, where now they're going to be more, baby boomers turning into retirement, and now the pension fund's going to have to adjust that for the next 10 to 30 years. Consequently, we're betting on that real estate will be a place for them to start putting money in, but they need to have access to the real estate, and the technology online that we foresee is giving that access. Consequently, we call it crowdfunding for real estate, but in old days, it was simple syndication of real estate deals, but facilitated by the internet. So that's what we're seeing right now, Greg.
And you say that, and that goes back to when I owned my broker-dealer, we syndicated deals. There was 1,000 little small broker-dealers around the country. We raised, $500,000 to $5 million every week, and we syndicated deals. And so I love that language you used. Again, that's what this is about. And I think about the investors out there, and you go, the thing about the real estate, like you said, it's not a startup. It's usually backed by some real estate. And so there's people out there that need to make at least high single-digit returns, maybe 8-9% returns, and then there's a lot of situations where you can make low double-digit returns on real estate, where you have good management going, hey, you give me other people's money, I'm a good manager, I know how to identify good properties, I know how to, whether it's rehabbing them or flipping them or whatever that is. Investors now have an opportunity to see with the and the thing about crowdfunding that I love so much is the crowd's going to I don't know how to say it, but like fret out the fraudsters, right? Because if you know how to leverage the internet and these different sites, the bad guys are going to get reported on, and they're not going to be around. So it's about doing your homework, following some of these people, and then getting involved. And like you said, this advertising online and advertising in radio for accredited investors for your deal, I say this is some of the most significant legislation that's been passed since the Securities Act of 33 and 34, and it should really, really help perpetuate free enterprise, which is why David's doing all these events and out there educating. That's why I'm doing what I'm doing, because frankly I'm a little concerned of what's going on with our country and the capital formation of our country. So I just super appreciate what you're doing, David, and out there doing all this kind of stuff.
No, thank you very much, Greg. And you're right. And you know what? Last year there were 8.6 million accredited investors. Accredited investor means that you made $200,000 in salary the last 2 years. You expected to do it next year. Or if you married a couple, $300,000. or you have a net worth of $1 million or more, excluding your main home. So that's the definition according to the SEC and FINRA on what qualifies as accredited investors. And there were 8.6 million. But then if you start looking at some numbers, $25 billion was invested by 265,000 accredited angels last year. That's only 4 or 5% of the total. So online right now, there's a chase for how do we find the accredited investors. The rest of 8.4 million in the US alone, they're allowed to invest in new deals. And that's what the online community is going after. They're trying to find them. On the other side, we're also looking at, how do we get the non-accredited, the people who do not have that net worth, to start investing more. Making money on the stock market is not what it used to be. I mean, the black boxes that were trading on the stock market started in 2003, 2004, and today, there's high volatility because a certain trigger will get the black boxes, the computerized systems on the stock market moving in a direction really fast. So it's a lot harder to make money on stock. And the new generation, the millennium kids, they don't even want to look at these areas. They want other ways to put their money and save their money. So we have also a millennia shift in the new generation that we were trying to talk to and educate on what's possible. So there's a lot of interesting things happening right now all over the U.S.
No, see, that's fantastic, and I'm so grateful to have you involved in what we're doing, because, see, again, it's about me bringing people that are in my network and in my sphere of influence to bring education to you. And you think of that as an investor. The more you get educated, and again, I was talking to a guy that teaches wealth creation, and he said to me, he says, he goes, when I do a little workshop, and maybe you talk about this too, David. He said, I do a little workshop. I asked the guy that's working the job, I said, if you want to retire with a $200,000 a year income and maybe earning 8% on your money, and you want to have a $200,000 a year income when you retire, how much money do you have to have in the bank to do that? And I'm like, I don't know. He said about $5 million. And it's like, okay, if I have to have $5 million in the bank to retire with a comfortable $200,000 a year income, because by the time you have all the different things come out of it, it's not much. You think to yourself, you're never going to get there with a W-2, and you're never going to get there without investing. So the more people can take get involved with people like you and myself and get that education, the better chance they have at a financial future that's meaningful. Not to mention, you can always feel good because you're supporting somebody's dream by investing in them and helping them out. It spurs everything.
Yeah.
Let me ask you this question. So what is the number one advice? So you got an entrepreneur out there, and he's looking to raise some money. What would you tell him the number one mistake you see entrepreneurs make over and over and over again? What would you tell him to avoid doing?
Well, avoid doing. Well, I would rather focus on what you should be doing. You should start with making an executive summary and then add 4 to 8 pages of addendums of bios for people involved in your company. If you can write it down, then you feel that you have an infrastructure, structure. Me as an angel investor, capitalist, I look at the business plans maybe 10 to 15 times a day. And I want to see, when I was talking to Abu Dhabi Investment Authority, they told me in one subdivision that, hey, we get 250 business plans a week. This is what we want to see. Put a summary of your business plan in a little square on the left-hand corner of the first page with just data, such as name of the company, name incorporated, name of the CEO, how much money is being raised. And then do 2 pages summary, and it's good practice for entrepreneurs to put it in 2 pages. Because 1 page is too easy, it doesn't give me enough information. A sliding deck or a business plan, I'm not going to read it. And also, if you can't say in one sentence, first sentence, what your business is about, and the second one, the problem you're solving, you lose my interest fast. And the third thing, as an investor, I'm always looking at the team. I want to see the full bio of all the people involved, advisors and the team. If an entrepreneur has had an exit, which means they sold or went public and passed, that's super valuable for us, because that means they understand the process and you can do it again. Also, you want to get people on board that has brand recognition companies in their bios. A couple of little small things. We look at this all day long. I'm part of 4 business networks, and I'm also representing the voice for the European Business Angel Association, and I send journalists over to the Angel Capital Association in the U.S. So we see what's happening with both continents, both in the U.S. and here. Well, in Europe and here. So I've had the luxury of being a representative of the U.S. Commerce Department to Europe to talk about policies and how to create more capital available for small businesses. The U.S. has 25 million small businesses. Europe has 28 million. There's about 500 million inhabitants in Europe, while there's 320 million in the U.S. So there have been a dialogue going back and forth where I represented the U.S. Commerce Department in that dialogue. So what I'll go back to your question, what should entrepreneurs do? You should also go out there. Follow, Angel Network with Greg. Read as much as you can on the website, but also show up at the events that Greg's going to, as well as the events that we're going to, and pitch investors. Talk to people there. And sometimes, you tell people what you want to do, but don't pitch them for what you want from them. I usually used to tell people, if you want money, ask for advice. If you want advice, ask for money. If somebody wants to get involved in your business, it's enough that you tell them a little bit. And remember, you need to get exposed to somebody 12 times before they have a comfort of being able to invest in your business. So that is an interaction of 12 times, and you got to build that relationship. I got friends going to family office events and private equity events, institutional events every week for years, and they never pitch because they know that if somebody's interested, they're going to be curious to learn more. And it's more of a passive way of pitching. But of course, I will challenge entrepreneurs, pitch. Try to bring down your pitch to 30 seconds and practice. And in one sentence, make it crystal clear what you are about. There's quite a few advices that I just gave you. But hopefully, some of these will stick with people listening.
No, I love it, and I'm going to extrapolate. There's a golden nugget right there. So if you want money, ask for advice. I mean, that is a golden nugget. I can't tell you how many times entrepreneurs have stumbled across myself and other check writers in a room of investors, and I use this expression that my partner hates me to say, but it's like they barf on themselves because the words just keep coming out, keep coming out, keep coming out, keep coming out, and it's like it's a money repellent, right? So your job is to become a money magnet, and investors who, when you ask me advice, I want to talk to you. I want to give you my advice, right? And that's like human nature. So that was a golden nugget. And like he said, management team and your presentation. So if you're not prepared, if you're not ready, you got to study other people. You got to study what other people have done and look at all that and put the best practices together for yourself. And here's the bottom line. If you don't do this, right? If you don't study, if you don't understand the language of capital, if you don't put these things in place, would you agree with this? They don't stand a chance to get funded. Zero chance to get funded if they come in not having that basic minimum education.
No, I agree with you. And you know what? Even today, I'll stand in front of the mirror before an interview or before something I need to present, and I'll practice in front of the mirror. You'll never get too old of that. And that's probably the first thing entrepreneurs should do, is just stand in front of the mirror and pitch themselves. And then do it with friends. And then they start going to conferences and practice their pitch. There are several events where you get to practice your pitch and make it better.
Yeah, we do a number of those Shark Tank mock-ups with Kevin Harrington and some other people in our networks. We do that as well. So let me ask you this: let's go ahead and wrap this up. What's the last words of advice that you have for anybody listening on the investor entrepreneur side, and then let everyone know what websites you'd like them to go visit to find out more about you.
I would suggest to go to Forbes and do a keyword search for David Drake. And read 20, 30 of the articles I wrote at Forbes. Same thing with Wall Street Journal. Or you can come to our website and go to thesoholoft.com, thesoholoft.com, where all those articles are syndicated. And just read and educate yourself, and you'll be surprised of what the best practices are globally and what's happening. And I thank you, Greg, for having me here.
Very cool. No, I appreciate it. And we're also going to take a list of the appropriate events that David is speaking at that are investor or entrepreneur related. We'll put those on our event calendar on our website, as well as we post those in the newsletter themselves. So this is Greg Reiter. If you really want to get involved with what we're doing, you want to get the education, you're serious about either investing or raising capital, go to angelnetwork.com, check it out, and we want to see you on the membership list. And from there, we open up all kinds of doors and resources to help you with everything you're doing, from your term sheets to your deal sheets to your due diligence checklist. So this is Greg Reiter saying thank you very much. We appreciate your time. Have a fantastic day, and hopefully we'll see you at the top of that wealth chain. Have a great day, everybody.